Most beginners think the hardest part of investing is finding the right stock. But what if the real challenge is resisting the urge to make investing complicated? Imagine two beginners. The first spends hours every day watching stock prices, studying dozens of indicators, following financial influencers, and jumping from one strategy to another. The second has a simple plan. They understand what they own, invest consistently, review their portfolio occasionally, and don't react to every headline. Which investor has the better chance of behaving rationally over the next 10 years? It may not be the person who knows the most. And that's where investing psychology becomes interesting. Your brain naturally believes that more information should lead to better decisions. So when you're uncertain about your portfolio, you search for another video, another stock, another prediction, another indicator. It feels productive. But sometimes you're not improving your investing. You're simply creating more opportunities to make emotional decisions. Think about what happens when you own 20 stocks you barely understand. Every price movement becomes another reason to worry. One company drops and you wonder whether you should sell. Another suddenly rises and you wonder whether you're missing out. Now, compare that with a simple portfolio built around investments you actually understand and a strategy you can stick with. There are fewer decisions, and fewer decisions can mean fewer opportunities for fear, greed, impatience, and FOMO to take control. This doesn't mean beginners should be careless. Simplicity still requires learning. You should understand what you're buying, why you own it, the risks involved, and whether the investment fits your goals. The difference is that you stop trying to predict everything. You don't need to know what the market will do tomorrow. You need a process that still makes sense when tomorrow doesn't go according to plan. That's the hidden advantage of simplicity. It doesn't necessarily make you a better stock picker. It can make you a better decision maker. And in investing, that matters enormously because your biggest mistake may not be choosing a bad stock. It may be abandoning a reasonable strategy every time your emotions change. So before adding another indicator, another stock, or another complicated strategy, ask yourself one question. Is this actually improving my investment process, or is it simply giving me more things to react to? Because sometimes winning at investing isn't about doing more, it's about removing the unnecessary. If you're learning how to invest in stocks as a beginner, remember this. Build a strategy you can understand, follow, and live with, even when the market gets noisy.